Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, August 23rd, 2024. S&P 500 currently sitting at 5601. I'm David Zarling. I'm here with our fall fire aficionado, Ian McMillan. We're getting upon that time of year, are we not?
We certainly are.
Take
Getting
out
a little crispy out.
Yeah, it's good. Do you feel like, are you there already? Where you live, or you got a little bit yet? Like, I view it as like, if you've got like 60 degrees in the evening, 50 degrees, it's good fire weather.
See, I'll push it though, because I'm impatient. I'm not
So you don't
saying
like-
it's good. I'm not saying it's perfect fire weather.
Or right
But-
there.
I'm like, I could definitely do one at like 65.
Oh,
7.
yeah.
I could do 70. I could tuck myself into 70 degrees.
Yeah.
If
Admittedly,
it's
I'm like, yeah, I'm like you. I forced one earlier, maybe like a month ago. It might have been like 75 degrees outside. And I remember sitting there going, I forced this one.
yeah, but it's a vibe, man.
It is a vibe. There's some out of fire or water, right? You sit by a lake or by the ocean or you by a river. It's very relaxing. Same thing with fire, man. A good fire. And I think you have one of those. You got a solo stove, don't you? It makes a good fire, man. Like I thought those were kind of overhyped, but they're the real deal.
Yeah, I need to get. They make a better model now.
They do. What makes it better? Do you know? Like, what is it? What it's made
you
out
can
of?
lift off. You can clean out the ashes easier.
Oh, okay.
'Cause
Yeah,
on
I
mine,
get it.
you can't lift up the inside of it.
Yes, correct. Yeah, mine's like that too. You got to take the whole thing and dump it.
Yeah, you have to like dump it on its side.
Yep, for sure. But yeah, man, we've got fire, football. We're heading into fall baseball season, the final push for playoffs. It's a good time of year.
Yeah, I mean the Braves falling apart.
I feel like
Bad
the
Austin Riley's out for 2 months.
yeah, that hurts.
Ugh.
The dude. But they should be in the mix towards the end. I mean, they got a good enough team. They'll be good.
6 games back from Philadelphia. Oh my gosh.
Yeah, Phillies.
Makes me want to throw up. But we have
One of
college football in next week. Well, technically this weekend, but really next week is when it starts.
Yeah, I mean, that's pretty sweet. We're right there, man. Fall's a great time of year. I know it is in Wisconsin. Football, outdoor, the lawn gets real nice because
Yep.
it likes that morning dew. So we got some seasonality coming with fire, football, grass. And I would even say we're not out of the seasonality woods for the market either. I mean, that we've seen in the second half of August does fit seasonality from a minor degree. And if you use that same seasonality, September tends to be weak and October tends to carry a lot of volatility. So it's not like smooth sailing necessarily from here. And we saw, we're kind of at our price level using the S&P 500 that we've seen before. We've been at this price level back in July. Then selling took over at that point. It'll be interesting to see if we can push through this level, if buyers have control. That's why it's great to use charts.
If we got a new highs and just keep going, that'll be impressive.
It will be.
We're really, great, right? We talked about it last week. We're back up above 5,400. We had followed through this week, but we're really getting into some waning momentum. It's slowing down.
Yeah, correct. Like we're up.
We're moving. And but you say that, then it's been a healthy rebound. This has not been led by mega cap tech.
Would you say it has been led by rebound?
Well, I get, okay. So let me rephrase that. It has,
You're allowed to do that.
in some ways, I think it has been led by mega cap tech. If you look at like just like NASDAQ versus S&P or growth versus value, you can definitely make that argument. But then, I mean, Dow Jones is out to new highs.
Yeah.
NYSE composite out to new highs first. Weekly
Yeah.
closing highs. Actually, I think Dow might have had all-time weekly closing highs last week. So then you look at that side. Now today, right? Today's pretty decent for Brent. It's not horrible. But we don't ever do this for multiple days in a row.
Yeah.
Like the Russell 2000, like Russell's having a great day. Am I expecting him to show up for work on Monday? I have no idea. He showed up today. I don't know if he's going to show up on Monday.
Yeah. Got a lot to prove. I mean, and in some ways, small caps using IWM has some similar characteristics about it. And there's a fair amount of things that look like that. EQAL, equal weight, Russell 1000 still isn't above its 2021 highs. We are seeing equal weight S&P. And I think this is maybe what you're saying about it hasn't been big mega cap leading us out. So if you take we're not at new all-time highs. We could potentially close at a new weekly closing high in that, but you do have RSP weight S&P. So the equal weight is beating the cap weighted to new highs currently. Now this could change, but this is a nearer term in development. I think that's kind of what you're alluding to is, yes, big cap has participated, but there does seem to be this movement happening on an equal weighted basis or even like mid caps. Time will tell. We did record some breadth thrusts July, and now we did get a Whaley breadth thrust, a Zwig breadth thrust, and a Lowry breadth thrust. And then, as always with breadth thrusts, the forward-looking returns from that can be really nice. It's really interesting to see them at this point in the game after the move we've seen since late October last year to now. It's interesting to see these show up again. And the immediacy after they happen, typically you do see a pullback after them. So it would not surprise me to see us down next week after recording breadth thrust this week, especially going into the highs like this. It would make sense to digest some of this, but.
And you said we had a Whaley breadth thrust?
Yeah, back in July.
Also, well, we also had a Lowry.
Yes.
Try.
Yep.
Did you mention
Lowry.
that? Sorry.
Yeah, that's okay. No, but you're absolutely correct. And these things are statistically significant. And the way to think about them is went from a severe negative breadth reading to a severe, extreme positive one. So you saw unified selling in one direction by unified buying a different direction. And the way to think about that is kind of like a flush. So you kind of have this, what appears to be a reset happening in the marketplace. Now, like I said, it would make sense if we're red next week and we pause here at the previous highs, but I don't know if you know this, Ian, but the market's never listened to my opinion. It's very sad.
Yeah. I mean, I said it last week. This is not what I would have guessed the market had done, but I think it just is more proof of how strong of a market is. And I'm not saying, we're not going to create some range here between 5650 and whatever this is down here, 5100, 5200.
Well, wouldn't that be beautiful? Wouldn't that be just a wonderful digestion of gains to move in that range? Now, some might say, well, I don't need the range to be that big, but I'll remind everybody.
Beautiful. I mean, as a trend follower, beautiful would be an interesting choice of words.
Yeah.
But yeah, I mean, it would be healthy, like if you zoom down on it and then, we have one more leg down, maybe into like early October. And then you're out of that to new highs by, who knows?
Only the market. Only good Lord Almighty.
Probably election night.
Yeah, could be.
But also a good time to remind people. And then we definitely will be talking about this in October with clients. We parked on this before. We'll probably do it every election year going forward. But, so with politicians are out with their platforms, right? Things getting thrown around about taxes and whatnot and borders. I mean, every hot topic under the sun talking about. And of course,
Right.
what does that mean for the economy? What's that mean for the stock market? I'm telling you, I'm telling you, I'm telling you. And we've got 2 months to bake this in. As stupid as some of this stuff sounds, should it come to fruition or not, you just don't know what the market's going to do.
Yeah. I mean, everybody wants to believe that whatever their favorite party is, that's what's going to be best for the market. And then if the other party gets in, it's going to be the demise of the market.
Or even this, it kind of like capital gains and unrealized capital gains. And I know that's been a hot topic. And yeah, it sounds insane.
Crazy.
It
sounds
sounds
crazy.
insane. They're talking about highest capital gains tax. Forget the unrealized capital gains. Realized capital gains tax 44%. And you could sit back and say, oh my God, that sounds so ludicrous. It's have to be bad for the economy. It has to be bad for the stock market. If she gets elected, this is just going to be horrible. They said the same thing about Trump in 2016. Just adding context, I'm not saying that it's not insane. What does it mean for the stock market? I have zero clues.
Right. The more open-minded you can say, the better chance you have of managing risk and reward. We've seen it over and over, the portrayal of because remember when Trump was elected, the market was supposed to crash. This was like undoubtedly that was going to happen. Just, you kind of alluded to it just before. And following his election for almost 14 months was the lowest volatility uptrend we've seen in history. And so you have to be open to outcomes that if your least favorite gets elected, that the market still might do okay. People don't want to hear that though.
They don't.
We're a pretty prideful bunch, us humans.
I get it. It's money, sensitive topics, sensitive feelings. But yeah.
Yeah. It'll continue to be a reminder, and here we see a market back above 5,400. We see these breath thrusts that have happened since July through now. You see a measurement like advanced decline line. Looks good. You mentioned Dow Jones new high, highly correlated. You mentioned NYSE composite new high.
Regional banks up 5% today.
Yeah, you just don't. I don't know if you know this, but you just don't see new highs in a downtrend.
No, not long-term highs.
And so your point about regional banks, even like the mega ones, the big banks like JP Morgan, Berkshire Hathaway.
You said yesterday JP Morgan is at an all-time high.
Yeah. And that's a major bellwether. I'm not saying bellwether in the sense that it leads the market, but when it's in an uptrend, the market is healthy.
And then look at a JP Morgan. Agree. Bellwether. Look at the break. What was that? August 2nd, right? Was the first big gas. You look at that. It breaks below 204 and it's had one. They came in. The demand is real. Holy cow. And V bottoms still in fashion. And not my favorite style, but that's what the kids are wearing these days, I guess. V bottoms.
Yeah, body glove, hyper color.
Time, the demand just comes in.
Yeah. Abercrombie and Fitch back in style. V bottoms back in style. Yep. Interesting. And Berkshire Hathaway, same thing. New highs.
Berkshire.
Eli Lilly, a leader in this market, new highs. And so when you look at the leaders out of the lows going back to late 22, early 23, leaders are still intact. And then you have bellwethers like JP Morgan and Berkshire Hathaway making new highs. These are just not things you see when the market is in trouble.
Walmart.
And again, go ahead.
Walmart. I think Walmart was on. That's a little bit more of a staple, but.
Well, yeah. Walmart, Costco.
Costco.
There's areas that are definitely holding up well and doing well. And I don't know. It's just really hard to get bearish on a market that continues to record higher highs and higher lows, rising 200-day moving averages, and the leaders keep leading and the bellwethers continue to hold up well. And I would say, Ian, you've been on top of kind of one of the major things that we need to highlight in this episode, I think, is just what are we seeing with the dollar?
Dollar. I mean, we're really coming in here. We're coming in here. Big move. I mean, really since April, but since the beginning of August is when we started falling off a cliff. When we talked about 104 relentlessly through 104, and as soon as we got through 104, but we got through 104 back in April and didn't do, or February, I'm sorry, and didn't do much. But this one is very strong, very strong trend to the downside, I should say.
Yeah. And you're referring to trade weighted dollar. And here we sit at 100.73. And this is a level that we touched from the underside. So this 100, nice round number. Everybody loves round numbers. People can remember it. 100 from the underside in March 2015, December 2015, we cleared it in December of 16, but then fell back through it, came back and touched it, fell back through it in 2020, cleared it with conviction in 2022. But here we are back to the scene of the crime. If we break 100 and sustain trade below 100, you do start to ask yourself about 96. You start to ask yourself about a price level of 89.90. And what does that market look like?
Yeah, or even like, I mean, I'd say like 03, if we break to the downside, and you get a real weak dollar. Let's say the dollar goes back to 70.
Okay.
Right? Think about, so what, last time we did that, what was hot? Gold miners.
Value.
Home builders.
Emerging markets.
Yeah, value, banks.
You're right.
And you see that train trying to get on the track. You see it out there under the surface trying to do it. You got to get the mega cap tech off the track. And that in itself is a very large, long train to figure out what you're going to do with.
Right. And it's it could be a both and, like think about how strong of a market it is if your semiconductors and large cap tech continue to uptrend and then you see a resurgence in the value trade. I mean, that's pretty healthy market dynamic.
Financials, we've got now financials fixed themselves yesterday, having a good day today, but it's still just financials and utilities above a relative 200 day.
You're talking from a sector perspective?
From a sector perspective.
So of the 11 sectors on a relative basis versus the S&P, it's just utilities and financials?
Yeah.
Really? Huh. Well, and what's interesting is Ian's not saying that the other sectors are in some type of downtrend. In fact, many of them on an absolute basis, so not comparing to the S&P 500, actually are very constructive looking. So then if they are weak versus the S&P, it makes you wonder how much stronger the S&P is then.
And look at XLI. XLI new highs. I'm pretty sure healthcare is at new highs.
Right.
Yeah, look at healthcare. I mean, look how strong that chart is.
Yeah.
And before today, it was doing nothing on a relative basis.
Well, and what's interesting is you look at XLI and you look at XLV on a weekly time frame. We've got a candlestick pattern here called Three Soldiers, and tends to be a launch point off of a low. So to see it at this point in the game, along with these breath thrusts, is extremely intriguing and an unexpected development. But do we really get to be surprised by the unexpected in markets? I don't think so, because that's all markets do is live on the fat tail and provide us unexpected things. And so you have these healthy digestions and resolutions out of consolidation on an absolute basis. So you just look at them by themselves. Like they might be underperforming, you know, you might have an Austin Riley, that's a bad example, an Acuna who's underperforming the league average the last month, but he's still kicking butt on his own. And that's a healthy dynamic to have these different areas holding up well if the S&P is that much stronger.
I mean, look at gold has held up well.
Yeah. I think
And then
we
you're
got to
like,
talk about
okay, we'll
gold.
do now. There's a difference here between gold and gold miners.
Yes.
Gold, you're like, okay, I mean, this clearly held up well. We've held above, what was it? We broke 2,100 an ounce, or what was it back in? Yeah.
Or using gold futures.
Yeah, like 2,000, 2,100 an ounce.
Yep.
And consolidated, and it's held up. We're out of that range. It's had, you know, a nice uptrend up here above 2,400. But then when you look at it versus S&P, you say, okay, well, I mean, it does look good, but it doesn't look better. Now, as I prefaced, gold miners is a different story. I think gold miners, you can, and maybe that's the canary, right? Maybe that's the market telling you, yeah, gold's definitely going higher because we're buying the miners. Maybe it's a dollar thing. I don't know.
Yeah. I think your analysis is spot on there. Where like when you observe, we're market historians, right? When you observe strong gold environments, you typically see the gold miners outperform gold itself. And we're starting to see that base, we're talking about, if you look at GDXJ, like gold miners versus gold using something like GLD, and you zoom out, this is a potential base that goes back to 2015. And if we start to clear relative levels, I mean, could just be the start for gold miners. Now, sometimes gold miners remind me of its unproductive cousin, small caps sometimes, where you're kind of waiting for it to prove itself. And so you look at like GDX, you'd really like to see a clear 42, 43, 44. You look at GDXJ, can we clear $50 to $60 level? And then to your point, then you'd like to see silver miners outperform gold miners. But
you would. And that hasn't happened yet, but well, depends on what time frame you're looking at.
It'll be interesting to see. I mean, is it really that far-fetched? If we see the trade weighted dollar cut through 100 to the downside, like a hot knife through butter, is it really that far-fetched to think that the things priced in dollars aren't going to accelerate to the upside, like gold, their derivative gold miners? It's really not that hard of a thesis to see. Now, admittedly, and I think you've highlighted this, that this is also a very logical level where you would expect the trade weighted dollar to pause and see if there's any buyers here. So we're going to get some really tremendous information on a trade weighted dollar basis here, right now in the next few months. And I think when you look at some major currency pairs, it is really interesting. I think you highlighted for the team this week, the British pound.
That's probably my favorite. I mean, I'm not like a Forex person, but I think it looks the best.
Yeah. I mean, and shoot, look at UWU is a trade, for United Kingdom, and it's breaking a rate of downtrend that goes back to 07. It's clearing a horizontal level at 34 that's been in place since 2018.
New all-time highs on Monday.
Yeah. I mean, it won't be all-time highs, but, wait, are you doing?
Sorry. Yeah. Not all-time highs.
Yes. But you're using, now to your point though, I mean, if you put the dividends in, it is new highs. If you pull them out, I mean, we're making highs that we haven't seen since 2018. No one's really talking about Great Britain positively, I should say. There's a lot of news about Great Britain that's negative, but look at this market climb a wall.
There you go. I mean, one of the centerpieces for negative global news at the moment, right? And so clearly that must mean, oh my God, look at this country. It's in shambles. Look what they've done. And I mean, yeah, like from a societal perspective, maybe that's true. And I don't know, maybe that's true from an economic perspective. But from a we want to buy British stocks perspective, yeah, the demand is there.
For sure. And I think we're seeing it elsewhere too. We've talked about Argentina on here in the past. Another major area continues to be India that continues to show promise. You look at like GLIN, an ETF, growth leaders for India. You look at DGIN, so a digital India going out to new all-time highs. You look at INDA going out to new all-time highs. Now, some of these things have a lot of work to do on a relative, but some also look like they're creating pretty large bases on a relative basis. So we shall see. There's opportunities. Meanwhile, you look at VEU, total world index minus US versus S&P, and it's same as it ever was, just a massive downtrend. So it remains to be seen that you can't just buy and hold everything that's international for your modern portfolio theory and expect it to work out well.
No, you cannot.
What else, Ian? What else are we wanting to highlight for our listeners this week that you want to touch base on?
I mean, we talked about breadth earlier, and a lot of advanced decline lines that are already at new highs.
That's not bearish.
Bullish percent not there yet. Under the surface, not bad. Not as using your frame, not out of the woods yet. I mean, IWM, we're back above 210. So we're through the gap from last Friday, 3 Fridays ago, August 2nd. Not what I thought it would look like, but I guess that's why you play the game.
Right. And I think, like you said, they're just we take a weight of evidence approach, and rarely do you see a market environment that checks all the boxes, but we have a market environment that's checking a lot of boxes. And that's a good thing. It's a good thing to see bellwethers continue to lead, to see the leaders off of the bottom in 22, early 23 continue to lead, to see breadth not extended. Yes, bullish percent just flipped to X's and it's low in the field, but I'd rather have that scenario than breadth sitting at 90 in X's, knowing that things are likely to get narrow really quick, really fast. And some of these things are just getting started. The Dow theory, where we have industrial average making new highs and transportation average has not yet. But when you look at the transportation average, you also see a scenario where, like, man, this looks like accumulation since 2021, and we're about to see this thing break out to the upside.
It does.
It has to do that. You look at, I'm using IYT. I has to clear $70 to prove that the buyers are in control of a base that's gone back, because it hasn't done anything since May of 2021.
Well, and to your point, if you're waiting for your entire checklist to give you the go ahead, I don't know when you get involved. Maybe like in January 2018.
Yeah, I was gonna say like maybe right at the top.
If you're waiting for, I get it. I'm big on, you want to see transport do well, and they haven't. I mean, they've done poorly, but they've also been underperforming since 2014, technically. Right. So I don't know what quote unquote stocks have done since 2014, but I know it's a lot.
Right.
And you can use that on that's a long-term view at it. But then, yes, same as let's take this year. If you're nervous about the market and transports or strong, consistent breadth or the Russell 2000, whatever your little, marker for, hey, I want to be long the market is. I mean, none of those have lined up, and look where we're at, and it's late August. And it goes back to, hey, those are all fun to look at. I can't tell you how many of those things we look at on our team. So many relationships trying to gauge risk on, risk off appetite, going into high beta, low vol, looking at the fixed income arena, junk versus Barclays Ag or credit spreads. Like there's all these canaries that have been released in the and you can look at them, and some of them, some of the canaries don't come out. They do kind of look sickly, but I mean, the trend is the trend, right?
Right. Well, and if you get transportation breaking out of this,
Well, then you've got we're talking about another multiple years of a bull market, probably.
correct. Yeah. If you're talking the transports are moving higher and the Dow Jones is moving higher, we might be earlier in this move than previously thought, which it kind of fits. You kind of study sentiment out there. People are really quick to jump on the other side of this. When you look at the surveys of investment managers and how quickly they deallocated or how quickly they moved to a neutral position, it was really quick again. More often than not, you see them not move, and that's where the top tends to be. And so we continue to see that. At the same time, it's not like put calls blowing out. It's not like people are crazy short this market. I still think from a sentiment standpoint, we're living somewhere between skepticism and optimism.
For sure.
We're not at euphoria. So the BTFD sentiment is not back. We've been talking about BTFD since the beginning of the year, but nobody else really. And here we have a market where the dip does continue to get bought. And so when other people start talking BTFD, I'll get nervous.
All right. Well, I mean, I think the angst is real. I think your inflation frustration is still alive and well.
Oh, for sure. The outside
right now,
factors are real.
got Kamala has entered the conversation. So we've got people stressed over, well, what does that mean? Yeah, it's.
Oh, for sure. There's the outside forces or things that are happening are real. An assassination attempt on a presidential candidate. Yeah. You have a party that decided to ask the incumbent to step down and someone else be put on the ticket who didn't have to run in the primary. I mean, it is factual. You have things happening in Ukraine. You have things happening in the Middle East. These are all, Ian and I are not here to tell people these things are not happening. It's just your opinion on them and attaching to what the market should do. We're just trying to encourage people that you really shouldn't marry those two things because the market's going to do what the market's going to do regardless of your opinion on anything that's going on in the world.
Agree.
All right. At this time, Ian, I think I'll highlight the of this podcast, the Adaptive Select ETF, which is listed on the NYSE under ticker ADP, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. You can find out more, including how to invest in ADPV by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal, distributed by Quasar Distributors, LLC. Ian, anything else you want to touch base on before we wrap it up?
It's an uptrend.
Uptrend with consolidation possible. We know September and October are seasonally have some more volatility to it. So wouldn't be surprised if we move sideways from here. But again, like Ian highlighted before, very strong market environment that it rebounded like this as quickly as it did, even surpassing our expectations. And anytime something surprises you or exceeds your expectations, you should step up and take notice. So with that, Ian, you having a fire this weekend or not yet?
Yeah, I think we'll definitely. I'll have to look at the weather app. I think it'll be chilly enough. I mean, we're down. It's tough. We're
first world problems.
Yeah, first world problems. How do I force a fire pit?
Yeah, man.
Attention.
Yeah, they're great. I hope it works out, that you have the patience to withstand until it's the right time. But with that, I appreciate you being on here with me. It's always a good time. And we hope those listening appreciate it. Last week we had a fair amount of people share the podcast and give us high rankings. We'd like to see that continue. So please do that. It helps us get the word out especially if you find these valuable. So thanks for listening, everyone.
Have a great weekend.